I'm asked on a regular basis by my clients what's happening with property prices in Queensland. I'm Angus Roxburgh and I'm your buyer's agent. So we've seen in the last few weeks that Trump has been imposing tariffs across countries across the world, and then last week he actually then paused those tariffs with the exception of China. And of course we've seen the escalations that have happened over the last few days. The reality is that property prices in Queensland aren't going to change fundamentally because of what's happening in global financial markets. That's despite all the turmoil on the stock market, money markets, commodity markets, etc. The reality is that property prices in Queensland, and particularly in the southeast corner, Sunshine Coast, Gold Coast and in Brisbane, are driven by a couple of fundamental factors. The first one is high interstate migration, high international migration that we've seen over the last few years, and low construction levels. What we've got is a big mismatch between supply and demand. The problem with prices in Queensland, or property in Queensland I should say, is that prices have been driven up because we've had so much demand for property and so little supply. On top of that, we've had affordability pressures. So a lot of areas around the southeast corner, such as the outer fringes of Brisbane, like Ipswich, North Lakes, Caboolture, those areas have seen massive growth in prices because people are fleeing the inner city areas to those more affordable suburbs because that's where they can buy a house, a townhouse or an apartment. We've also seen apartment price growth outstripping housing price growth over the last 12 months, again driven by affordability. If people want to live in a city, if they work in the CBD or in the surrounds, and they want to live close to work, they want convenient access to transport, to facilities, to things like major event areas, to South Bank, for example, then the reality is people are shifting from the dream of owning a home, maybe the dream of owning a townhouse, into apartments. And hence we've seen massive demand for apartments. In some suburbs, the growth last year has been extraordinary. And that's because people are moving from those more expensive properties into cheaper properties. The other thing that's happened in the last month or so is the new state government has announced, finally, after the 100-day review, what they're going to do about the Olympics. And what we've seen in that is massive announcements around new stadiums, infrastructure, new venues, new facilities, things like the Athletes Village. And the reality is that's going to put further pressure on construction and therefore further pressure on prices. That's because the ingredients that you need to build those assets are concrete and construction workers. They are the same ingredients that you use to build apartments, buildings, houses, etc. Lastly, I'll just touch on interest rates. We saw an interest rate drop 2 Reserve Bank meetings ago of 0.25%, and at the time, before all of the tariff wars started, the expectations were that interest rates had dropped somewhere between 0.5% and 0.75% this year. Since the tariff wars, what we are now seeing is economic commentators, the major banks, the money markets are all indicating that interest rates should drop by a further 1% this year, with very high expectations that the next drop will be next month in May. What that's going to do for house prices traditionally is drive them up, because as the cost of money goes down, more and more people will come into the market, in particular investors. Investors are very driven by returns. As we know, rental returns have gone up substantially over the last few years, but property prices have gone with them, and of course interest rates have been going up as well. So in a lot of cases it's made it harder for investors to make the numbers stack up. What will happen as interest rates drop is more homeowners can afford a bigger house, a bigger apartment, and for investors in particular, suddenly the sums start to make a lot more sense. So I'm already seeing a lot more inquiries from clients who are looking to buy investment property, be that their first investment property, be that second or third. So we're going to see continued growth in prices in Queensland because of these factors. We may see a little slowdown for the next sort of 3 to 6 months while things settle down globally. But the reality is after that, the consensus I'm seeing in the media with commentators, etc., and my own personal opinion, second half of this year, we're going to see prices start to rise significantly again. So if you're looking to get into the market, if you're looking to get an investment property or a first home, the old saying goes, the best time to buy is today, the better time to buy was yesterday. Good luck, and give me a call if you'd like some help.